Cool. Welcome everybody to the fourth, I think it is, edition of this podcast, where we don't actually have a meme today because this whole episode is going to be about memes. So
I mean, what's happening is that we're going to start off with talk about, I think, Bitcoin and what was it, like Bitcoin hitting 50K. There was Wall Street bets and Robinhood actually going to the hearings and congressional hearings or whatever. There's a lot of stuff happening, and like what we just made the banners now talking about Bitcoin hitting 50K. It's at 52.5K now. It's pretty insane how quickly it's rising. But yeah, banks might be getting the kind of fear of missing out, because I do know that more banks, and even users, I remember when it hit 38K, I think, was the big number a fucking week or two ago. I was like, oh, should I buy? It's already high. This is everyone's thought process. And here it goes up another 15K. And you're like, oh, I can't possibly go to 60 or 70. And it's like, watch it. In 2 days, it will whatever news announcements are going to come up. I think one of the predictions you made last week was about Bitcoin going up 5K.
Down.
Yeah, 5K down?
Yeah, I can't remember now, but it was something like that, but it was way off.
yeah. So you're completely, yeah, exactly. I mean, I just talked about its massive volatility, how it can go up or down, and it's like, who knows? And it just kept going up. And I don't know. I have been hearing more reports on banks actually going into it in terms of as an investment.
Why do you think they're doing it though? Because they could go in at any price. It doesn't really matter to them. If they manage trillions or 100 billion even.
No, I mean, I think it does matter in terms of percentage-wise, because as for a bank as a whole, if it were to lose $1 billion on an investment, it's obviously nothing. But at the same time, for the trader who loses that, he's going to get fucked in the ass in terms of, he's going to get thrown out of the office. So, from a individual's perspective, you have to make wise decisions. But now in terms of why they could be going in, I think it's taken much more of a mainstream kind of look in terms of how it's, again, I think we talked about this in depth last week in terms of the payment systems integration and the general opinion of it. And I don't know. Oh yeah, there was stuff about Elon Musk buying into it and how corporate treasuries are going to start getting into it. So now that the ball's kind of rolling, I think you could be seeing some banks or institutional investors kind of getting a FOMO, fear of missing out, and wanting a piece of it, because like we said, it's 52.5K now. It's just been going up. And whereas I remember, I was even reminiscing about the 2017 peak, when it reached 9 or 10K dollars. So 18K dollars. What am I saying? 9K dollars. Yeah. And that was a huge feat. And if you think about it, even if some stupid idiots bought at the top, not including me, or near the top, not including me, and they just held it out, they forgot about their wallet, they could wake up today and have more than doubled their money. It kind of also gives you a sense of how crazily the price has gone up now, and obviously the money behind it, right? Because from what we remember in 2017, that was insane. The price was sky high, no way, bubble this, bubble that, and here we're at more than double the peak of the previous peak. Way more.
I mean, it did pop the bubble then, because it dropped down to 5 or quite a low price.
And I remember, it dropped down to 3K, and even then I remember it's just that's why I've never really played with, on specifically I'm playing with the asset now, because I don't know much about it. I remember 5K, that sounds very expensive. Okay, it sounds very expensive, but if it shoots up to 52K, then it doesn't sound very expensive, So there's definitely a lot to play here, but at the same time, it's so unknown. When you're used to something more fundamental or macro or whatever, not to do with crypto and technologies, then, I would say stay out of it like I have. If you want to do a gamble or a bet, and, by all means, go ahead and have fun. But there's no fucking way I'm going to get into that.
That's what I was going to ask. If somebody bought at 18K, what would you recommend they do now? Should they hold or should they sell?
Bro, it depends on the person. It's one of those things that you don't know where it's going to go, because in all honesty, it's been in the public eye for only a few years. If you think about where it used to be in the public eye before the previous bubble, in other words, nowhere really. I don't think so. I don't know if someone bought it 18K. Well, yeah, then they're going to have a nice fat profit now. Like I said, way more than doubling your money. But at the same time, it's down to the person's kind of, how long do I want to hold it, the time in the market, and where it could possibly go. Because depending on where you look, you can see banks setting targets of like 100K or more than 100K, right? But at the same time,
that's just them, having bought it. Now they want the price to go up. So
yeah, for sure. That's what banks are in the business for. But then you've got the argument of like the cart coming before the horse. It's like, okay, are they setting this report because they've bought it and they believe in the asset, or are they setting these reports buying the asset and because they bought the asset, not necessarily because of what they believe to be in the report necessarily. But I mean, we're only going to find out. We could be coming back in like a month or two and being like, oh yeah, so Bitcoin hit 150. I'm an idiot for not going in. But at the same time, you don't want to be harsh on yourself, because how the hell could you have known? But at the same time, you want to take the risk, go ahead. You want to sell and cash in, yeah, sure.
None of this is financial advice, so we don't get sued like deep fucking.
No, this is barely financial and definitely not advice. No, this is ridiculous. That's it.
So what's happening in the States? Got Robinhood, got deep fucking value all in Congress.
There's a lot of shit happening. So I think yesterday on the 18th, or over this past weekend, we had the hearings when it came to Robinhood and Wall Street Bets, specifically like deep fucking value. I think his name is like Keith Gill. And it turns out that he got fucking sued for something to do with securities fraud, right? There's something along those lines.
I'm not sure if it's a trader or whatever, but he works in the industry. So he's
a wealth manager.
As a CFA, yeah.
Yeah, he's a I think he's got a CFA. Yeah, he's a wealth manager. He's like 34. That's why I heard on some podcast a few weeks ago, and I was like, damn, bro, this guy knows very well what he's doing, right? In terms of like actually executing his trades or investments. Not to say that he's riling up this community for his own benefit or manipulating the markets, because if that's what you want to call him, a market manipulator, then you're a bit of an idiot, to be honest. Because again, he's been in these positions for a long, long time. And again, you've got the idea of like the cart before the horse, and the idea kind of talking about, you can believe in your investment and you can talk. What's wrong with talking about it in online communities? I just don't get it. I don't get it. I don't get the difference between that and the ideas dinners that investment bankers go to. There are coffee shop house meetings, and there's discussions that they have on their Bloomberg terminals and the chats. It's so it's frustrating, because even then there was an interview with the chairman or CEO or board member. I don't remember. I think it was chairman of Interactive Brokers. So I remember we played a clip of him on, I think, our first episode. He's like this old white balding guy, and his camera was kind of up high, and he was talking about market manipulation, how the brokerages were suffering from what the Wall Street Bets are doing. And on live TV, he talked about how if they hadn't done what they did in terms of the trading halts, GameStop would have gone. So I didn't remember specifically the wording, but the idea was that if they didn't stop. The idea was that their trading halts stopped GameStop stock price going to thousands, right? And when you talk about, comparing that situation and their very obvious action or very directed action versus what the fucking value of Keith Gill is doing, and comparing that on the basis of market manipulation, the fuck? I don't get it. There's how can you indict one and not the other? I don't know.
Yeah, so that's super interesting, actually, because I was on Clubhouse the other evening and I was listening to this big group, and like 1,000 people were listening. And basically what they were saying is that exactly this guy who made the statement. And so Robinhood, by law and by the SEC rules, had to stop trading just because they didn't have enough liquidity to cover their trades. And it takes 2 days and they didn't have enough cash in hand. So like they were just, in theory, they were just following the rules. They also weren't very good, but they were just following the rules. This guy, He went on TV and he boasted that his company had enough funds to cover it, but he still arbitrarily decided to halt the trading. And so Robinhood might actually be fine, but this guy's going to get screwed, I think, from the lawsuits, because he had no reason. He made his own judgment call about which stocks should be traded and which not.
Yeah. Fuck's sake. Yeah, you're right. Because I remember maybe it was episode 2 or 3, or on my own podcast as well, I talked about the clearing houses, right? and how Robinhood has to post up the liquidity for these transactions to be settled over a 2-day period. And because of these frictions and, time period and the liquidity requirements, that's what really screwed Robinhood specifically over, right? In terms of like how that affects the brokerages. But then you're right. I didn't even think of this because, okay, that's following the rules in the SEC and blah, 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 whatever regulations. They're here for the, consumers, retail investors benefit. Ooh, whatever. What was I saying then? The interactive brokers guy, you're right, because even on the freaking interview that we played, which a lot of people watched, he was saying how they've got like 5 billion in equity. They're fine. Oh, no, IB is fine. We just... we just fucking manipulated the market. That's all we've done, boss. That's it. I don't know. That's how it kind of sounds like at this point, right? When you kind of start building the pieces together, which is cool that we've actually stuck with this topic over the weeks because we've seen it develop from the initial reaction, initial everything that happened, and now that it's kind of falling into place. I mean, it sounds like that guy should get screwed in the ass. I don't know, because if you're looking at about the if you're talking about having to follow the regulations. And your financial, as a business, as a brokerage business, like your financial integrity and therefore the market's integrity, that was a problem at Robinhood and their situation. But by the words of the chairman, it was not a problem in interactive brokers. But they still halted the trading because it would have gone to thousands and it shoulda, coulda, woulda, right? Okay, well, if it would have, and if it would have impacted your financial integrity and the market's integrity, the same way, it had Robinhood, who collected $3.4 billion US in funding over the next few days from their trading hold, and then kind of rolled back their trading holds. That makes sense, right? When you start building the pieces together, that makes sense of what they're doing. But interactive brokers, fuck, it's not good. It's not looking good for them, right?
These guys are gonna get screwed. But let's see what happens. I'm quite curious to see. And it's funny that this tends to be the only topic where AOC and Ted Cruz agree. So that's pretty funny.
Yeah. I was for some reason I was laying in bed yesterday and I was thinking of that specific thing. I was like, this situation is so weird because you're getting both sides of the aisle, especially someone like Ted Cruz and AOC agreeing on a topic, not necessarily liking the fact that they're agreeing on a topic with one another, but at least agreeing on the topic of how problematic this was, right? This is way more than problematic. And I think AOC posted another tweet about this Robinhood situation, is the fact that they can't get away with just an apology to their users, right? And it's like, for sure, I kind of understand that because, okay, from one point, yeah, they're following the rules and regulations, this, that, and the other. Maybe the regulations are at fault. Okay, fault or not, it seems like the regulations were what prompted Robinhood to do the trading hold, right? If it wasn't for them and no liquidity and funding requirements, and like the clearing houses, the 2-day clearing, even if Robinhood's net position in short is net zero on all of these trades happening, they still have to post a lot of collateral. It's there's just so many frictions.
But I think the reason why they agree is because they're both the same type of politician. They're both populist. And the populists always want something that's about public outcry, right? Essentially this is about the retail traders and the common people against the elites and the banks and the hedge funds. That's the narrative at the end of the day that we were discussing in the first episode.
Yeah.
And so I think that's why they agree.
Yeah,
and because
at the end of the day,
topic they never spoke about. They just agree.
Yeah, right. Yeah, I think for sure at the end of the day, it's in terms of like your voters base and who you can get to vote for you. Because whereas it sounds nice to talk about from a politician's perspective, these guys shouldn't get away with an apology. These guys fucked you over. These guys this, that, and the other. You still, like we have on the podcast, the show, have to explain the other side and the mechanics behind the brokerage business and the actual industry there, how it operates, which prompted them to do what they did. Which it's not like it justifies. Sorry, it adds reason to what Robinhood did. It doesn't just kind of free them of any responsibility of sure, but it still gives reason to what is happening. But on the side of interactive brokers,
let's see how that develops. I mean, but yeah, the third thing we wanted to cover today is about inflation.
Yeah, so this has been a big topic recently because of rising treasury yields, U.S. treasury yields, as well as consumer expectations, right? So I read this article by Barron's, which I'm gonna share my screen with, basically, if I can just get it up. That's what she said. Yeah. So essentially, what we saw recently was rising yields and a bit of profit taking, on stocks. In other words, stocks were falling in the US and somehow them being correlated. And obviously, this kind of relating to inflation expectations. And besides that, you can obviously read on the topic and read what's been happening. Here, for example, stocks have dropped as US yields have jumped. This isn't a one-time problem, but a continuing one that could get worse. That's just an opinion. This isn't necessarily a problem. This is what I don't get. So really, when I want to rant about something, when I want to write about something, the way I write and talk and rant about stuff is when I get really fucking pissed off, right? When I come into disagreement with whatever I read, whatever I see. And this is one of those things. Why isn't stocks falling and bond prices falling a good thing in terms of why is it a problem? And why is it a one-time problem, but something that could get worse? No, it's just a deflation of the bubble that we have, right? There's so much money. There's so much. We're in the middle of a pandemic. Everything's hitting record highs. Of course, you're going to get pullbacks. And of course, you might step into potentially another bear market. I wouldn't see why that is not a possibility, right? I'm not saying that it is going to happen and that it's great because bears and whatever. No, it's just the idea of how can you say that whenever they fall, it's a problem and it could get worse? Like, stop scaring people. You're an idiot. So yeah, the S&P was down 1% from Tuesday's intraday high on Thursday. So yeah, pullbacks on stocks, especially growth stocks, right? This is what this article is also talking about. And this is because inflation expectations, rising inflation, this tends to, or rising interest rates or yields specifically, that tends to impact growth stocks more than value stocks. Because whereas value stocks, they have the fundamentals behind their operations today, right? This is their cash flow today. This is the cash flow over the past 10 years. And this is, most probably the cash flow over the next 10 years, right? The value stocks have more tangible, easily forecasted earnings, right? They've got a moat business, whatever. Growth stocks are all about what it could be in the future, right? The growth potential, the cash flow potential. And the way the value of growth stocks is calculated is by discounting those potential earnings in the future, right? So when interest rates, yields, and that discount factor rises, their value significantly goes down more than value stocks, right? Because essentially the risk-free rate, be it the U.S. Treasury yields or the U.S. interest rate, when that goes up, essentially your return on future growth, future earnings, as well as bonds and their interest payments goes down, right? Because bonds pay fixed coupons usually, and so if interest rates go up, for example, specifically inflation, that deteriorates those fixed earnings or fixed income earnings. But anyways, yeah, that's just a bit of kind of theory. What really pissed me off in this article is, if I can find it, here it is. Importantly, higher inflation expectations reflect an improving economy, which also means faster growth in earnings. Really? Okay, sure. For that reason, or by that logic, 1970s in the US were a period of growth, prosperity, and great fortune for people because inflation expectations were freaking crazy, right? No, it doesn't reflect an improving economy. And here's what really pissed me off, right? Because sure, in the long term, in tandem, GDP growth, economic growth goes into a certain extent in tandem with a bit of inflation, right? There are long-term correlations between the two. There are long-term, be it causal or not, there are long-term co-movements which occur. For example, like I mentioned, GDP, inflation, this kind of stuff. I mean, you can connect all the macro variables together. But the point is that using that long-term co-movement to describe short-term movements as we see now in terms of rising inflation expectations and whatever is happening in stock markets, whatever, is very, very, very misguiding in my opinion. And here is my comment, actually, which I also wrote in the article yesterday. I stayed up and wrote it because I was pissed off. And it's got 4 likes. which I also wanted to point to people. 4 likes, my comment. It's really not much, actually.
Have you liked it yourself, though?
No, I haven't. I was thinking about doing that. But even the other comments, like 2 likes, 1 like, 1 like, 2 likes, they got some dislikes. So I'm the king in this bitch. But, okay, whatever. The point is, right, so I pick on the statement or the sentence importantly, because saying importantly justifies your position. Obviously, importantly, higher inflation expectations reflect an improving economy, which also means faster growth in earnings. And this is what I say. Really, question mark, in terms of, actually very fucking questioning what they say, because I really disagree with it. And here's why. The University of Michigan's Consumer Sentiment Index, they essentially carry out these surveys which showcase consumer sentiment, which is something that I mentioned, as well as an index of consumer expectations, as well as a lot of other variables. But here's what I say. The University of Michigan Consumer Sentiment at December 2020 stood at 80.7, which is last seen in levels which was last seen in levels of 2014 and down from 101 in February 2020, right? So, okay, that's a big drop. And although it has slightly recovered from the pandemic, well, it is nowhere near the levels that we saw pre-pandemic. In fact, it's what we saw 6-7 years ago. So that's a lot of pullback in terms of how the consumer feels, right? The sentiment of consumers, and therefore also their consumption, right? Their consumption decisions, investment decisions, saving decisions, whatever is impacted by it, right? And like I said, the index of consumer expectations is down to 74.6 from 92.1 same dates, right? So December to February, so this past year essentially. And so here is what I say, because when we talk about the rising prices, rising inflation expectations, rising oil prices, whatever, things can go up, but what is the driving force behind it determines whether that is a good sign or a bad sign. For example, I can give you the example of oil prices in terms of, okay, oil price goes up. Is that good or bad? Well, that depends what is pushing the oil price. Is it, for example, industry demand, right? Industries moving up, this economic growth, this, that, and the other. Therefore, they demand more commodities, resources, inputs for the production to produce more goods. So the oil price goes up, but it's fueled by industry demand. That's okay. That's good, right? Industry's economy is growing, for example. Oil price goes up. Second scenario. What caused it? Supply shortages, right? So OPEC cuts supply, but the price goes up. Is that good? Not necessarily. That could be cost inflationary, right? That is cost inflationary. Third scenario. Oil price goes up. What caused it? Precautionary demand. People are buying up oil because they're thinking something's going to happen in the future. There's problems at the Suez Canal. There could be supply shortages in the future. So there's precautionary buying, precautionary demand, oil price goes up. So you have 3 very distinct scenarios of, for example, the oil price, which all signify completely different sentiments, whether the economy is improving a lot, right? And it's the same with inflation expectations. So what I go on to say here is that, for example, inflation and circulation of money can be good, right? In terms of inflation and inflation expectation, right? Depending on what is driving it. Here, the same kind of logic. For example, more individuals securing jobs, achieving better pay, producing more goods domestically, opening businesses, spending their disposable income. This reflects an improving economy, right? More consumption, more investment, more domestic production, without a doubt. That's the economy improving, right? But then I go on to say another scenario behind inflation expectations, right? Because obviously, from what I mentioned, you can have higher inflation, higher circulation of money, higher inflation expectations, right? That can be good, quote unquote good, whatever good and bad is, but nevertheless, a sign of the improving economy. Secondly, $2.4 trillion US, $900 billion US, $1.9 trillion US in deficit spending. That was the CARES Act. After the pandemic, $900 billion US was the COVID relief package, and $1.9 trillion US is what Biden's busting out. So this deficit spending, in turn, dished out on people's personal debts, right? They get their unemployment checks. That goes into their costs immediately, be it rent, be it whatever debts they have to pay off because they don't have jobs. Stock market gambling, Wall Street bets. If you go onto podcasts, you're hearing adverts for DraftKings, which is online sports betting. You're hearing adverts for eToro, which is an online sports betting. Which is an online brokerage. right? So you have stock market gambling, increasingly more expensive to import imports from China, because goods aren't getting produced domestically in the US as much as they are imported from elsewhere. And moreover, transport costs from China to the US and from China to Europe, because of cargo shortages, like cargo container shortages, they're falling. So you're getting no production at home. You're getting more spending because of what the government is giving you, because of deficit spending. And you're getting goods and consumption, but based on imports, not domestic production, but based on increasingly expensive imports. That represents not an improving economy, but an ailing hegemony. That's what I said. Because it's like I don't know what to call it, like a proxy economy. I don't know. You're spending the money that's being printed on goods that are getting imported, right? That is not an improving economy, and that is why inflation expectations are going up, for example. But it's different to the scenario which I initially said, right? So specifically, and this is what I said on the comment as well. Importantly, higher inflation expectations do not reflect an improving economy. Only that individuals expect higher inflation, right? But when you look at the drivers behind it, that gives you a whole different picture. So yeah.
So it's pretty bad. It's like, as you said,
yeah, it fucking is. It's not great. It's not great, in my opinion, right? It's just a kind of counter argument to the stocks falling bad, bond prices falling bad, inflation expectations good. That's so naive. That is very naive, in my opinion.
Okay. But do you not think it's just because it's a phase of COVID that they're doing support, and then the economy will get back once they get the good vaccine program?
Yeah, but that doesn't defeat the point of misguided opinions of what inflation is meaning now. And whether or not I agree with the deficit spending, that's a different topic. That's besides the point. I'm not saying deficit spending is good or bad. It's just the idea that it is money being printed and deficit and consumption fueled on debt, as opposed to something that could be a sign of an improving economy, like more jobs, better pay, this, that, and the other, more disposable income, right?
Fair. Okay. Yeah, thanks for explaining this. I had no idea. And
yeah,
it's slaughtering barons or whatever they're called.
Barons, I love it. And, I like reading it. But again, there's different authors there, right? So when I see something that I don't agree with, it's not because I hate barons necessarily. I read them. But it's just because, yeah, I just don't like the idea of stocks have dropped as interests have jumped. This isn't a one-time problem, but a continuing one. It's like, no, it's not a problem. The stocks are pulling back from all-time highs during the pandemic. And again, yeah, that was kind of my whole idea. I disagreed, and therefore I had to vent. And that is this live stream where I vented.
It's a rant show. The Stonk Show rant show.
Stonk Show rant show. Love it.
Cool. So, predictions? Anything on your mind for the next few weeks, months, years?
Yeah, I feel like what we will definitely see is the falling relative attraction of American assets to, for example, European assets. We're going to see mass capital flows, and these are figures that I've been looking at as well. Mass portfolio flows, that is, purchases of bonds and equity in emerging markets and European economies as opposed to America. So this kind of, stocks falling and bond prices falling is because capital flow is flowing out, right? Because people are unsure and people can find better returns elsewhere. For example, with Mario Draghi's appointment as Italian Prime Minister, I've been reading about the bond sales, I think there was 2 bond sales done by Italy, near record high prices and therefore near record low yields. There's also Greek bonds getting sold at very low yield percentages as well. So
yeah, because an emerging economy, a good recovery plan. Greece and
yeah, exactly, right. So that's the idea. Like these countries are getting good recovery plans. There is more potential for growth, and then, as I mentioned, also emerging economies in general. That is what gains at a weakening dollar, and as cash is flowing out. Because if you compare the American situation to, for example, the situation of Italy, of other European countries, of some emerging economies, they might be faring better over the next few months. Again, the room for growth in equity prices and bond prices is very low in America when compared to the inflation expectations that you have here, as opposed to, European economies, for example. So I think we're going to see great capital flows, capital outflows from America into countries like Russia, specifically Italy, Eastern European economies as well. I've seen the figures behind that. There's a lot of money flowing there as well, like Czech Republic, Hungary, I think Poland as well. So yeah, let's freaking go.
Back up in Poland.
Yeah, no, I'm only down 50% year to date, so I'm faring okay, better than last year for sure. But that's what I think is going to happen over the next week, months, really.
Sure. Okay. Yeah, I don't think I have any predictions at the moment because I haven't had a good think. I was gonna bet on Bitcoin again and see if my prediction worked,
Yeah.
but you're right. I haven't thought about the market dynamic of how far up it's going to go. But I completely agree with you. And one thing that I'm going to explore next time is the vaccine and Macron and what he's doing. Because I think it's super, super smart. Because China and Russia, they're all like going into African developing nations, and the EU is being super selfish, whereas they should be distributing vaccines. Because it's new front for vaccine diplomacy, just like you have economic diplomacy, Belt and Road.
Okay.
So yeah, let's see what happens over the next week, and then we can talk about that too. Yeah,
for sure. Sounds good. Awesome.
That's everything. Thanks everybody who's watching. And yeah, and cool. We will see everybody in a week's time. Adios.
Have a good day. Bye-bye.